Phil McGuinness from Sherlock Software. Thanks very much for your time. You're involved in developing software specifically for the agency industry. One of the biggest components of software for the agency industry is the component relating to trust accounting. What we'd like to do today is explore how trust accounting software can be used to detect theft and misappropriation of trust funds. But before we do, can you tell us some stories where people have actually stolen or misappropriated trust money recently?
Thanks, Peter. We've been in this business 26 years and there's an enormous amount of stories, but ones that come to mind that are quite unique or distinct, where staff put money into the trust account program and then reverse the money out of the trust account program and then use elaborate means to hide the fact that they've entered and removed those transactions. Some systems do not record appropriately those movements. That's of concern. We have seen elaborate scams where the money didn't go into the trust accounting program. The money appeared to go into the trust accounting program. One system that we're involved in, they had two copies of the program, one at the front desk that issued receipts, another copy at the back that accounted everything to the owner, but they were never connected together. And it was actually a money laundering arrangement, fake checks, fake everything, fake bank recs, without the principal's knowledge of what was actually going on. We've had a person join an office, work there for 3 weeks, left each day to go to the bank and never ever physically went to the bank. The bank and the money never went into the bank the entire 3 weeks they worked in the office. Yeah, so we've got some amazing stories down that line.
And do the police ever get involved?
Well, in one case, the one where they were running two separate systems, we ended up, once we'd set the program up and been through the whole story, there was an 11-page statement made to the police. In another case, we were contacted where the federal police had actually impounded some computers from one office where the property manager had receipted bonds and found that on this particular system, once you put in, say, a plus bond payment and then reversed it doing a minus bond payment, that both entries disappeared off the computer, no longer showed on the ledgers, and that person took advantage of that, $140,000. One case we had in the Sydney area where a lot of Asian students rent in this area. A typical bond's around $2,000, 6 weeks rent, $350 a week, and none of the bond money was lodged. Around $140,000 was used as a bank, let's say, between the staff to use as a casino. Amazing stuff.
And what sort of money are we normally talking about? Is there a common theme that it's over $100,000? Is it $5,000?
I've actually come up with a general rule of thumb. There's 3 frauds that I tend to see. $18,000 for some incredible reason seems to be a fairly typical amount on a fraud that's run for several years. The largest fraud we're involved in was $1.2 million. The Department of Fair Trading brought us in on that, where they needed to charge the person for the amount of money but could never fully work out how much the total amount was, and we were hired to rekey the data in for 2.5 years prior, so a set of records were available then for police action and court action.
What are the most common methods used by fraudsters?
The most common is just don't put the money in the system. The second most common that I've seen is the altering of paid to dates. The paid to date is a representation of where a person's paid to. That's where an owner looks and says the tenant's paid forward or back, I've got X amount of money. What happens is a unscrupulous person in an office, and we saw one in the last 6 months, one person was receipting the money at one terminal and another person was reversing the receipt at another terminal away from that person's desk, and therefore taking the money out of the bank, put it in, take it out. And if the person has access to a paid to date, this is bad on a trust accounting system. Nobody, once that paid to date is running, there's no way, like a receipt number sequence, no employee should be able to go and change it.
Could you give us some tips, perhaps, Phil, on how property managers can help to detect fraud within their office?
I think a supervisor, because unfortunately to say, in a reasonable amount of cases, the property manager has been the person involved in the fraud, but I'd say that's 50-50 with staff that work for the property manager. The property manager supervisor should be checking the tenant histories and reversals. Reversals are a common trend that come up when money disappears, if money's going into the system. And it's not a bad idea, even if it's quarterly, to go and scan through your logs of what's been reversed and try and understand why they've been reversed. The second one is really bank reconciliation fraud. Some systems these days, I've been in this business a long time, and I see a bit of a trend happening here where magic buttons make things balance, and people like programs like that, but because they don't have to do any work, all of a sudden it's magic. It solved itself. So let's imagine you've receipted money this day, come to the end, not enough money, program goes, there's a difference in figures, do you want me to fix it? The program goes out and makes an adjustment for that amount and puts it on the bank rec. And I'm seeing systems carrying these things forward for years, or consolidating, or if it's there for a while they change the date and carry it forward for another day. That's of great concern, and when we not long ago opened in Queensland, this was a major problem as we went to different sites to find out some quite interesting amounts of money that were out in the actual bank rec.
What about principals? How can they help detect fraud?
I think the important thing for a principal agent is to make sure the policies aren't broken. New staff will come in and say, I want to do it this way. If you've got a working system in the sense of a method of how you check your bank recs on reports you require, keep them coming. When you're not seeing reports, you're not seeing activity, you're not citing the bank reconciliation, or it's already pre-filled out and it's simply a sign in the corner. There's not a secondary piece of paper to explain the adjustments, because a bank rec may have some adjustments. If you don't have something showing the unpresented checks or the adjustments, you're very concerned because that bank rec is worth nothing. I would advise a principal to also check on reversals from time to time. Give me a look at the reversals log, give me a look at the change log. Let the staff know that somebody is aware of their activities, because in a lot of cases these people get away with this because there is no direct supervision.
What about the use of software programs? How can you as a principal of a real estate office, use software programs to help detect or prevent theft or misappropriation of trust money?
The idea of a correctly designed trust accounting system, which is different to an MYOB or another sort of accounting system, that money belongs to other people. All that money is someone else's. Even the agent makes a claim on that money to be paid his commissions, and there's tax money collected for the government. The agent themselves can't see it as a self-looking after system. The program does its best job to collect that money in appropriate ledgers, but equally there are features within a program to pay that money out, disperse it, send it elsewhere. My observations have been fake creditors. We've seen systems where a person has set up a fake cleaning ledger, written to particular owners, told them their place will be cleaned for X amount of money, sent off all these bills, the money's collected in that ledger, and no cleaning jobs are actually done. There's been no supervision to actually see that work has actually been completed.
Right. Now, one of the things that you mentioned was used by fraudsters was setting up fake service provider details. So I think the example you used was a cleaning service that was never actually conducted. What could a principal do to stop that? Is this a software issue, a supervision issue, or is it just impossible to detect?
I think it's not impossible to detect, because each creditor, most trust accounting systems, you have to put in an ABN, a legitimate ABN, and produce appropriate documents. Whenever somebody's writing to major owners, I found in a lot of cases where these cleaning scams have happened, it tends to be someone that has multiple properties. They tend to pick on particular people that don't read their statements correctly, or often don't question charges. But I believe it's still due diligence in the trust account to see why would a certain cleaning company all of a sudden be able to clean 200 owners' properties. There's something glaringly wrong there.
Phil McGuinness, thanks very much for your time and your valuable advice.
Thank you, Peter, and much appreciated the opportunity.